In this presentation, we will take a look at child and dependent care tax credit for federal income taxes. Note this is different than just the child tax credit for qualified children, as opposed to the dependent care credit, which is related to the expenses for the care of the child in certain situations. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Qualify for the child and dependent care credit, we need a qualified person. A person under the age of 13 and who the taxpayer is entitled to include as a dependent. So typically a dependent, someone as a dependent, usually a child under the age of 13, a dependent or spouse of the taxpayer who is incapable of caring for himself or herself. That would be kind of the exception or the unusual situation. The norm will, of course, be where we have the child that is under 13 and we are paying for some type of dependent care, looking for credit related to those payments for the dependent care. Earned income test. Taxpayer and spouse, if filing jointly, must have earned income during the year. There may be an exception if the taxpayer or spouse is a student. Work-related expense test. Must pay child and dependent care expenses so taxpayer can work or look for work. So notice the idea of these tests. We're looking to pay the expenses, or the credit is designed in order to give a benefit to those who are paying expenses for child care so that they can work. So the idea behind it is that it allows people to be able to work and be gainfully employed, and therefore in order to qualify, the earned income is one way that the IRS can see if or test whether someone is working and therefore having the child expenses for the point of working. And that's going to be the idea. So we're paying the dependent care so that we can work. And therefore, if either ourselves or our spouse are not working, then the IRS may try to see that through the fact that we don't have revenue, earned income during the tax period, and therefore may not qualify for the credit under those circumstances. The idea being that if the taxpayer or spouse is not working, then they are able to take care of the child and shouldn't need then to have the dependent care. Or in other words, the cost of the dependent care is not in order to allow someone to be gainfully employed, which is the point of the credit. Must make payments to someone taxpayer can't claim as a dependent. So in other words, we cannot have a situation generally where we have a son or daughter that we're going to pay in order to take care of another son or daughter and claim that payment as typically a dependent care type of credit. That typically will not work because both of the individuals, both of the son or daughters, would be eligible to be claimed as a dependent. Provider identification number. Must identify the care provider on the tax return. Typically, we're going to have a provider identification number. So if we have someone that we're looking to have dependent care for us, that's going to be a question we probably want to ask so that we don't have any problems with the filing of the taxes, and we can write these off easily, is to ask for, do we have the provider identification number, to make things easy for us so that we can then claim this information and then provide that information about who the provider was, who we made the payments to. Here's going to be a questionnaire to see if we qualify the credit for the credit. It's a little bit intimidating, but it's not too bad if we spend a little bit of time with it, so we'll go through it quickly here. Was the care for one or more qualifying persons? If the answer is no, then we go all the way down here, can't claim the child. If it's yes, then we're going to say, okay, let's go to the next question to see if we can claim the credit. Did you have earned income during the year? So did you have earned income, typically like W-2 income or business income? If no, then of course you can't claim the credit because that's the point of the credit, in order to allow us to earn income. If yes, then we go to the next one. Did you pay the expenses to allow you to work or look for work? So this one before kind of indicates that that might be why we made the payments, or at least a partial reason for it, because we have earned income. So maybe we paid the payments in order to generate that earned income. And this is asking specifically. So we're going to say, if that's the case, we'll say yes. If not, then no, because that's the point of the credit. And then if we go to the next one, if yes, were your payments made to someone you or your spouse could claim as a dependent? If it's yes, then it doesn't qualify. You can't make the payments to someone that qualified that is a dependent. You can't like pay your child to take care of your other child typically or something like that. So if no, then we keep going here. So we didn't make the payments to a dependent of ours that we're trying to write off. Were your payments made to your child who was under the age of 19 at the end of the year? And if we say yes, then we'll have to go down here again. If we say no, we'll keep going. And notice that's similar to our we have a related person that's a dependent. If it's 19, then it's possibly that it's still our child, but not a dependent. So we'll keep going. We're going to say no. Are you single? If we are single, if we say yes, we can scroll down here. If no, we're going to say if we're not single, are you filing a joint return? And if we say no, do you meet the requirements to be considered unmarried? And then if we say yes, we're going to go back down here because we have to, in essence, file a joint return would be the preferred way or the normal way in order to claim the credit rather than married filing separate. And then we go, do you know the care provider's name, address, and identification number? So note that identification number there. We're going to have to provide this information typically on the tax form in order to claim the credit. If yes, then we go down here. If no, did you make a reasonable effort to get this information? So we need to provide it. If we made a reasonable effort, then possibly yes. We're going to say, did you pay expenses for more than one qualified person? If we say no, are you excluding or deducting at least $3,000 of dependent care benefits? And then finally, you may be able to claim the child dependent care credit. Fill out form 2441. So what's the calculation look like? We'll go over some general rules. It's going to be a percentage of the qualified expenses incurred. So we'll have to obviously add up the qualified expenses and take a percentage of it. The percentage is generally between 20% and 35% and is dependent on the taxpayer's adjusted gross income. So it's going to be dependent on income levels. As income levels rise, then there will be adjustments. There's a cap on expenses of $3,000 for one qualifying individual and $6,000 for two or more. So note that we don't get any more benefit if we've got more than two qualifying individuals. Here's a table that will give us an idea of the adjusted gross income and the related percentage. For more accounting information and accounting courses, visit our website at accountinginstruction.info.